Hello, fellow risk takers, and welcome to my worst investment ever. Stories of loss to keep you winning. In our community, we know that to win in investing, you must take risk, but to win big, you've got to reduce it. Ladies and gentlemen, I'm on a mission to help 1 million people reduce risk in their lives. And I want to thank my listeners and viewers in London today for joining in that mission. Fellow risk takers, this is your worst podcast host, Andrew Stotz from A Stotz Academy, and I'm here with featured guest Pritesh Ruparel. Prit, are you ready to join the mission?
I am ready to rock. Let's have some fun.
I brought out my announcer voice for you.
Yeah, no, I noticed the change is pretty good actually. Yeah, if I ever launch a Ultimate Fighting Championship version 2, I know who to call.
Yes, if you or any of the viewers and listeners need a bio, I will read that for you. So, well, speaking of reading bios, what a great opportunity. So let me introduce you to the audience. Prit is the CEO of ALT21, a leading technology company in hedging and currency solutions. With 2 decades of expertise in financial derivatives and structured finance, he leverages technology to make financial products accessible and affordable, aiming to save small and medium-sized enterprises millions annually on international transactions. Prit, take a minute and tell us about the unique value you are bringing to this wonderful world.
Thanks, Andrew, for the very kind intro. Anyway, so as you said, I started my career as a commodity and derivatives trader, and like all good risk takers, you navigate and hone your skills with some challenging markets. You build a bit of a skill for making decisions with incomplete info, and obviously under loads of pressure. You definitely know that kind of role. You're the least smartest person at the end of the computer,
Hmm.
and you build a bit of a skill for spotting patterns or trends before much smarter the people than you are doing in many places around the world. But it's a good, I guess, learning ground for any business career, and transitioning into a role of CEO of a scale up. I mean, I never thought traders would be good, or traders or risk takers would be good scale up CEOs. I never saw the link.
Mm.
But my God, when you actually go through that transition, you realize the skills you bring are pretty unique because I don't know, you never really see lots of high profile scale up CEOs that come from trading. Well, I haven't, never saw the link, but those skills are pretty much what you need to do any kind of business or grow any kind of scale up. So yeah, I'm hoping that's a bit of uniqueness that I'm bringing um, to the world.
That's great. Yeah, I mean, in the world of finance, like I was a sell side analyst for 20 years and I had to research and all of that. And yeah, I had specific skills that really worked in that area. One was my presentations, and one was, my thinking process, a lot of deep dives and stuff. But I had a lot of traders and sales traders that I worked with that they were doing stuff that, I was far beyond what I understood. And also it didn't fit my personality. I think a lot of things I've learned these days is that it's all about DNA and kind of fitting your DNA. And so, yeah, we all end up in our spots, and that brings our uniqueness. Maybe you can tell us a little bit about what you're doing, so that the average listener out there could understand it.
Currently at all 21, you mean? Yeah.
Yeah.
So yeah, we're so what my early part of my career was as a derivatives trader, and then went on later to build kind of an engine room for a lot of fintechs within FX hedging and payments. Now, working closely with lots of different exciting clients, from some of the world's biggest high frequency hedge funds to these scale up businesses, gave me a bit of a unique insight into the microstructure of markets, like how it actually works, all the way down from trade execution through to processing. And you then start to connect the two together. So we basically brought the technology from the high frequency trading world to a client facing environment and use that to really drive down the costs of the transaction and then pass that back on to consumers. I never really understood why these big bloated banks had all the customers, and I get now why they do. I mean, there's a trust of a brand and everything like that that we won't have. Like, we're this scrappy young fintech who might be 10 times cheaper or 100 times cheaper, but we trust this brand. So kind of for us, we're that platform that's now trying to build trust without kind of blowing loads of money on marketing, which means you genuinely have to make a difference and you have to, a lot of our business, 90% is through referrals. So customers have to refer other customers, and that is a interesting journey to go through. So yeah,
Mm.
that's what we're doing. Hopefully making an impact to a lot of businesses. I think company goal is to save 100 million for businesses globally in 3 years, which is a nice way of looking at things. It's not let's make 100 million, it's let's save the clients
Yep.
100 million. So yeah, and
And what's the typical use case, like where a new client, maybe not a big one, but let's say a small or getting
yeah,
approaching medium size, what is it that they come to you for, and what do they get?
yeah. So really, really good question. I mean, for most people, FX or cross-border transactions or hedging is the most boring thing on a list full of stuff that you'd rather do. I'm a scale up selling software. I'm in a team full of 8. My goal is to sell more software so I can get more engineers and more salespeople. FX is an afterthought, right? Like it's not. So often they don't know it's a problem until it's a problem. So you're like a SaaS founder. I sat down for dinner with one recently, and it's a really funny story. I think she told me she got to $1 million in revenue, and I was
Mm.
like, cool. Team of 8. She goes, that means I can now go up to 13 engineers from 8, and like this is the next stage. And I said, it's really funny because we're sitting in London. Did you say dollars? She's like, yeah. I'm like, why did you choose to price in dollars? She's like, it's cool because everyone priced in dollars. I
Mm.
was like, okay. Like literally that was it. She was, if I'm being honest. Why did you choose to price in dollars? Because it's cool. How do you do it? She's like, I'll just do it with my bank. I said, just show me the last statement from your bank. And we just looked at it quickly, and I was like, they're charging you 4%, which means of that $1 million, 40 grand has gone out to the bank, who probably doesn't need it, for
Oh,
literally converting these trends. And she literally nearly, I mean, my wife had a massive go at me 'cause this lady was pregnant. She said, you shouldn't have said that to her. You really but that's an extra bum on a seat, right? And for me, that's the reason I do this, and the reason why the whole team sits here doing this is because this is stuff that's going on every day. People just don't know. So either we come to them and say, do you know you're paying this? Or they come to us when there's a problem and they say, you're doing this. And also, I mean, most people don't know there's a platform out there. Like most big brands in FX cross border are B2C. There's been like no real killer brand in a non-bank space, in our view, in the B2B space, like a proper fintech platform, not one that's like a little bit of front end and then there's just hundreds of humans underneath it calling you. We're a proper fintech platform where you can just do stuff for yourself. We can embed lots of cool stuff and save money ultimately, which whilst hedging and FX is boring, saving money to me isn't.
so what are the mechanics of that? I mean, I can see definitely that there's a market there, an opportunity, because the bank fees are the last thing that pay attention to.
Yeah.
You pay attention to the revenue coming in, or let's say I have a Thai company and we earn money in Thai baht, and then we buy equipment in Italy in from uh, a machine supplier that's supplying espresso machines, and they're not cheap. And we have to put, a lot down and get that, to Bangkok. And it takes 3 weeks, 3 months from when we order to when we've got it ready and available for sale. So, we use the banks a lot for that, but I can imagine that there's, fees they're taking out of that we don't even realize, the extent of them. But for a company like that, what would they do, or how would we use your type of service?
Yeah, so I mean, that's exactly the kind of use case. Like, so you just you nailed it, really. You would log into our platform, you'd onboard. We don't onboard in 20 seconds
Yep.
because we believe that feedback from a lot of fintech platforms is that the worst thing they get is a big fintech platform onboards them in 20 seconds, and then when they go to make payment for that coffee machine you've been waiting for 3 months for, the platform's going, wait, who's this again? And stopped, gets delayed, and now 3 months turns into 4 months, and you're speaking to a robo advisor who just keeps kicking you around. So we onboard you in a day, let's say, but we won't keep onboarding you and checking who you are every
Hmm.
3 months after that, or whenever there's an important payment to make. So onboard online, You get education materials online. So if you want to know how to even protect yourself, you get a simple platform that gives you access. We show you how much money we make. So like we're the first platform to actually sit there and say we make 3 basis points or 4 basis points on this trade. And people go, what's a basis point? And we show you in money terms. And
Yep.
like, so it's there to empower you with the knowledge. And it's really simple. You can set up your currency management. You can then pay your supplier in Europe all within one space. You can send the information downstream to your accounting package. Just we're there to make life easy. And ideally, um, you know, improve access, reduce the costs, and talk simply like a human, which I think
Mm.
is important for most business people. Um,
And what's the
so
what's the mechanics of it? For instance, once you got an account, I've got, let's say I've got, $300,000 that I need to get to our supplier in Italy. I instruct my Thai bank to transfer money where? How do I do that?
yeah, so you when you open an account, you'll get say 35 multi-currency virtual IBANs immediately. So now you've got virtual IBANs in your name with local accounts available in say Europe or the UK. So you've now got access to local payment rails. So you can send money from your Thai bank into your dollar account, do the conversion, and then pay out the European supplier instantly. Um, all online, all straightforward. Behind that, though, is an ultra complex technology and regulatory framework that we've put together. So we don't white label other bits of technology.
Mm.
We obsess over tech. We've looked at the entire tech stack that's out there. And like this doesn't come from like having a little look and going, right, this is gonna work. We've got people who have serious domain expertise here who have worked out that to build an ultra low touch, high frequency trading firm mentality infrastructure, you have to build it. So we've invested heavily in the technology underneath it. We've got regulatory licenses overlaying that, and that enables us to deliver a really simple user experience. So
And,
the mechanics of it might be complex. That's our problem to deal
yep.
with. The front end user experience is supposed to be as simple and beautiful as possible, really.
And just so I get this clear, so you're not a bank, but you're regulated to manage the movement of money. And are you partnering with banks at all, like to store that money, or you basically only transit that money?
Yeah, I mean, this is the thing I always find funny. So like every fintech ultimately touches a bank,
Yeah.
right? Unless you're in like digital asset world, you're touching a bank. Even then, you're probably touching a bank. So we um, we have the regulatory licenses to carry out the activities that we do, but ultimately, client money sits in safeguarded accounts or client accounts in tier one banks that remain outside of our holding, which is interesting because it's often a bit of a misnomer that people's money is safe with a bank versus a fintech, whereas actually all the money you put with us is in a safeguarded account. All the money you put with your bank is in the UK, for example, protected up to a certain amount, and then it's
What is
not.
a safeguarded account? What does that mean? You've got insurance on it or something, or?
No, basically like there's a it's like a trust account, so that money can't be touched by ALT21. Every day it gets reconciled back to a client. We get audits on it annually. So we have to present those audits to the regulator. We have to at any point identify client money and differentiate that from an ALT21 kind of funds.
Okay.
Now, underlying the actual transaction, now we don't market make or take risk against the client. And reality, FX is so sophisticated on the institutional side that there's no edge for us in really doing that. Like
Yeah.
JP Morgan, Goldman's, all the banks are all far better at doing that than a small fintech would be. So underlying our infrastructure is a network of banks. So that's banks acting as payment providers, banks acting as FX providers, and we use those banks to put together the sharpest price we can and then pass that on to customers.
And so from my perspective, let's say I'm transferring, let's just say $300,000 worth of bot into an account that needs to be converted to dollars. Is it being converted? Am I sending it in bot terms and it's being converted through you guys, or are the banks getting a conversion there into the dollar?
Yeah, you wouldn't have the bank taking their piece. You just send it in the currency that you want to sell, and we would give you the currency you want to buy back, for example. And we try and keep it that way so that there's no extra spreads along the way. Yeah,
Fascinating. It's like it's you're taking away a juicy opportunity for the banks that they're getting in every transaction by basically it feels like it's like a detour around, let's say we normally have a direct way that we go to our supplier, but that direct way is extremely expensive. And
yeah,
here we have a little, come on this way, and you can do these transactions at a much lower rate. And also you're separating the currency transaction from the movement of money.
yeah.
Whereas with a bank, every movement of money is connected with a currency transaction, and you can't get away from that. But here you're separating that out. Am I correct in saying that?
Yeah, but we do handle both. So we handle the conversion and the movement of money, but we're separating it from a single transaction that's locked in a single bank channel. So you're not stuck to one bank's price
Yep.
on X, and then you're not stuck to their payment capabilities. We try and bring together the best of the best of the bank's FX capabilities and the best of various banks' payment capabilities, so that we find the most optimal route to get your money to where it needs to go.
Yeah, I guess the way I'm thinking, maybe I should have said it like the banks bundle
Yeah,
these two things, and the benefit of the bundling is that it's less transparent, and the less transparent it is, unless you really push to understand it, then the more that they can charge, and you basically make it a transparent transaction, unbundled and separate, and you make money off of that. But that amount of money that you make is nothing compared to what the banks are charging.
yeah, and you gotta be. I dislike it when fintechs spend a lot of time just bashing banks. The reality is they have a business, they have a big head count, and that's just the oil ship that it is. You can't turn that around in 60 days, and suddenly do a 360, and suddenly you're, yeah, sorry, 180, and you're going in another direction suddenly. So we've built this because we had a greenfield to build from, and that enables us to do cool things. So we see banks as partners, we're helping them increase volume. And actually, one thing that's happened more recently is we're starting to license our technology to banks. So part of our mission is to make an impact to the small business. And with 90% of these businesses still just working with banks, we feel that, we're going to still try and kind of work and offer something, but there's also a value add in licensing our technology to scale the business significantly. So that's a new business line that's been developing. I mean, it's challenging because selling technology into banks takes longer, but fortunately we have an order book that's probably full at the moment. If not, we kind of trying to build around that really and pick the banks that we can make the most difference to. So
And my last question on this, because I find it fascinating what you're doing. My listeners out there are in the following order: U.S., Thailand, Australia, India. Let's just take those countries as the first kind of line. Is there any restrictions or problems with any of those listeners out there, that it doesn't work so well in a developing market like India or Thailand, or is it works the same everywhere?
well, it's interesting. So every jurisdiction will have its own nuances, right? Whether that's regulations, whether that's cultural habits, whether that's like just language or something like that. That things. So we're trying to solve for different regions. I mean, we cover the majority of markets where FX is moving.
Mhm.
I think there's like 180 in the broad, and we're at 35, but the volume of the 35 is a big skew. We're expanding capabilities into some of those regions, and we're also exploring new technology that's being used and preparing for big changes there as well. So, like the emerging markets have opened up massively, and I don't think that trend is going to necessarily stop in terms of their growth and their participation at a global level. So, where there are challenges, I would definitely say listeners should continue to watch what we do, because we are trying to remain at the sharp end of innovation here. So you'll probably see us being one of the companies that's willing to do things properly, and that's an important part. A lot of fintechs just want to do it and ask, break, do, and ask for forgiveness later. It does work and it's proven really well for some companies. What we're trying to do is, okay, understand, prepare, and then just be ready for it to do it properly because trust is the biggest thing. So
Yeah, with
if you're
money.
trusted to be around for the long run, we think you win in the long run,
Yep.
right? But and it's you have to pick a path that works for you. So culturally, we as a firm are set up to do things properly. The harder things first, swallow a whale, get all that done up front, but then scale quickly.
Well, exciting. I have a lot more questions I would ask, but we got to move on to my worst investment ever. And now it's time to share that. And since no one goes into their worst investment thinking it will be, tell us about the circumstances leading up to it, and then tell us your story.
Yeah, so this is really interesting. So my first trading role was as a market maker in commodity derivatives. So I joined as a kind of junior on a desk of 12, and then for some reason or other, over 2 or 3 years, it became just me by the end of it. And I was sitting there alone in a glass box for about 9 months. And I think it was a dead of July. And when you're sitting alone you can just imagine that there's a trading floor and a business, and then there's this glass box of market makers in the middle. And I think everyone outside was having bets on when I'd pack it in, but I got some resilience in me, let's put it that way. Um, one summer I put a ton of analysis into a particular commodity spread trade, and I just thought the market was wrong, right? So you just have that moment where you're like, I don't know. It's like a mini Big Short. Remember the film Big Short and the story of the Big Short, and everyone's kind of thinking one thing and you're going, what's going on here? And generally, as a market maker, you're trained to run a diversified book and blah blah blah. But maybe it was quiet, and I basically just went all in on one thing. I thought the risk to reward looked good. And I'm sitting there, this trade just isn't doing anything. Much like, to be honest with you, I never thought about the Big Short parallel, but much like when Michael Blurry's like sitting there, nothing's happening and nobody's marking the trade or whatever, and he's going, this is insane. And then the worst decision I made was to go on holiday. So I was like, right, I'm going to go away. And with nobody
With the
managing,
position open.
well, that was my thinking. And then my one manager that they put me to report into, because there was nobody else, he said, I think you should liquidate that position. It's 100% of your portfolio. I think before you need to go away. You've been on your own in that glass box. He said, even with stop losses, I just think you should come back with a clear mind. It's unlikely to go all in on one position. So I listened. And that was the worst decision I'd made, because a day after I liquidated, there was a natural disaster in a port where this position would have benefited. Like, it's not like I planned for that or anything, but my God, I think that was like, the spread went from a range of like 0 to 10 to 250 in an hour, and like would have been the life-changing trade that you put on. And I think I had the biggest position that I could have had possible. And I just thought that was the worst investment in terms of just spending. So it's kind of an odd way to look at it. I could have probably made the life or the career-changing trade for me at that moment, but I decided to go on holiday and listen, and that taught me a lot. I mean, my first boss always said you got to put yourself in a position to get lucky. So I think I did do that. But yeah, sometimes you learn a few lessons about listening to people and
It's
anyway.
it's the hardest, one when you think about the things that we miss,
Yeah.
particularly when we miss them close. Like you can, as I tell people who say that they missed this or that, I'm like, well, I missed 747 stocks that went up yesterday by more than 10%. But here is one that you did some work on it. And also, sometimes when you do a lot of research in something, things tilt that way. And so it's, I can imagine that your holiday was a little bit frustrating.
Yeah. I think I had like every broker I work with call me and say, have you seen the market? Because they just been liquidating my position the day before. So they
Sorry, mate.
were, yeah, sorry about that.
You appeared brilliant. It just didn't happen.
Yeah, just yeah, but that like you learn lessons from those kind of things, right? So
So let's think about it from a perspective of a new guy who has some experience like you had at the time, and he's sitting in that situation. What would you recommend that he do?
the main thing I'd say is like you when you start in this kind of any kind of role, you should listen and learn as much as you can, take advice. But ultimately, the one thing you should never do is make a decision against your gut. Because the worst thing is to trade on something or to make a decision that you don't 100% really, you yourself don't agree with. And I think that comes from good decisions as well. Like the worst, we used to judge traders not by the outcome, but by the decision. So you make money from getting lucky. You're not going to be, nobody's going to be patting you on the back.
Mm.
But you used money and you got unlucky, but you made good decisions. Everyone thinks that's okay. So like that was a big distinction I learned early on, and I think it keeps you grounded, right? So between the highs and the lows, just try and stay grounded. And ultimately, if you do make decisions from what you believe in and have conviction in, then yeah, if you follow those parameters, you'll be fine.
And
Either
if
that
you,
or you're
li-
really
yeah,
bad.
and if you listen to episode 601, you can hear Annie Duke talk about thinking in bets and how to make sure that you're not punishing people for bad outcomes when there were great processes, that went into that. So I think that's a great point.
Absolutely.
Um, I wonder what's a resource of that you either have of your own or any others that you'd recommend, from your own services to books or other things that have could bring value to our audience.
Yeah, it's a good question. I mean, I think I've plugged our own services enough, but the thing that is I think important is to build systems or processes or resources that work for you. Like everyone has different levels of risk appetite, emotional intelligence, patience, and there's so much information out there to look at. Like there's some killer books we've all read, there's some killer resources we all follow. The one thing I found really interesting is to broaden my horizon to seeing people I wouldn't like. This is who I would focus on when I was in trading. Now,
Mhm.
who I listen to comes from completely different angles. Like, and they have views on markets or investments that just blow my mind sometimes. Where I'm like, we just weren't looking at it this way. So I'd say try and find your own, and you'll come across amazingly people, different commentators that give you views on things that are going on in the world that just give you a different lens, right? So that's the main thing that I've learned
That's great.
recently.
Open up.
Yeah.
I think I started in as a sell side analyst in 1993, and the amount of opinions that I could find, were very scarce, compared to now. There's so much out there. And so, yeah, it's there's a lot you got to sort through, but you find the people that you admire or respect, and there's a lot of great stuff, for free coming out. It's just amazing now what's out there. Last question. What's your number one goal for the next 12 months?
Yeah, so it's interesting as a fast growing fintech, you build goals around what you're doing, and like we've been fortunate in terms of customers. We have a good product and a good offering. We haven't really productized our go to market. So for us, it's like having repeatable, scalable processes for our go to market and using that to make an impact globally. So to the point I made earlier, you said, what do you use? Like for us, systems and processes are key. And you can do that in like your operations and your tech and whatever, but your go to market is quite important. So that for me is the big thing,
Mm.
that we're definitely working towards in the next 12 months.
Well, I'm gonna want to learn more about this, and for the listeners and the viewers out there, I'm gonna have links in the show notes so that you can go and learn more about this.
Cool.
So I think it's fascinating, and so good luck on that. And maybe in 12 months we'll check in and see how you're doing.
Awesome.
Uh,
Brilliant.
all
Thanks
right.
a lot.
Yeah. Well, listeners, there you have it. Another story of loss to keep you winning. Remember, I'm on a mission to help 1 million people reduce risk in their lives. As we conclude, Prit, I want to thank you again for joining this mission. And on behalf of A Stotz Academy, I hereby award you alumni status for turning your worst investment ever into your best teaching moment. Do you have any parting words for the audience?
Remember, it's a marathon, not a sprint.
There you go. There you go. And that's a wrap on another great story to help us create, grow, and protect our wealth. Fellow risk takers, let's celebrate that today we added one more person to our mission to help 1 million people reduce risk in their lives. This is your worst podcast host, Andrew Stotz, saying, I'll see you on the upside.